RBC Capital Markets head of global commodity strategy, Helima Croft, is with us. Happy Friday, Helima. Good to see you.
Thank you for having me on.
So what, are you saying that which is the more powerful dynamic right now, the supply or the demand?
I mean, right now, if we look at what's happened this week, it's been macro worries, China, concerns about rate hike that have caused the softness in oil prices. But when we look at what's happened, from July onwards, we've had Saudi discipline when it comes to supply. They've done their unilateral 1 million barrel a day production cut. They've basically backed their words with barrels. And you've had improving signs of demand. We've had these big inventory draws from the United States. We had a 6 million barrel a day draw this week from the United States. But also China import numbers have held up. June was a monster month for China imports. July a little softer, but if we look at August data so far, it looks really solid. And refinery utilization rates in China also look solid. So you have this macro worry about China, the property sector, but when you look at the oil data, it looks constructive right now.
Interesting. What do you think that says? That China's not as weak as we think? Or is there some other... Go ahead.
I think when we look at sort of where we are in terms of oil demand, it certainly means that China remains an active buyer. Now, some people have said it's going into inventory, but we would also say a barrel off the market's a barrel off the market. And again, if we look at refinery utilization rates, that would indicate that it is being used in country. And so the interesting question will be, I think, going forward into fall is, if you have some improvement in the macro picture in China, is that sort of tailwind for oil going into end of the year?
Is it all demand-led, Helima? What's happening with supply at the same time?
I mean, the Saudis have been very disciplined. I mean, they came out in June, they did a 1 million barrel a day unilateral production cut alongside the OPEC cut. And initially, Sarah, there was some skepticism. People were saying, well, the Saudis are going alone. It means they can't get everyone together. But we took the view, we were at that OPEC meeting, the Saudis mean business. And they were basically saying, we will steer this recovery. And if we have to do it alone alongside OPEC, if we have to bear the burden of adjustment, we'll do it. And that's really what's different than 2015. Remember we had that China stock market credit scare in 2015 that caused oil prices to collapse? OPEC was in a passive mode then. Now they're in an activist mode. And the big question is going to be, what happens with the unilateral Saudi cut come October? Will they extend it for another month because they're concerned about the China story? Will they start adding barrels back? That's the next big decision to watch when it comes to OPEC.
Helima, how does the Russian factor figure in right here? Whether it's just, how much production they're managing to get out there. They obviously had to jack up rates, the central bank did, to try to defend the currency.
Yes. This has been a really interesting story because one of the big headwinds for oil in June was the fact that you had so much Russian oil on the water. And people said, wow, look at all the ships headed to Asia. Russian exports remain high. We've really started to see Russian exports come down. And if you look at it from the start of the year, we're off 800,000 barrels when it comes to Russian output. So we are seeing Russian output trend lower. And so the question is, does this hold up? Are we going to see further declines? But right now, nobody is talking about this armada of Russian crude like we were earlier in the summer.
Helima, we'll see what happens in the coming weeks. Obviously, such a fascinating story for the last month and a half. Helima Croft, thanks.